I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Senor Nicolas of the Hodges, who is also an investor and the publisher of Daily Profit Cycle. This is the 304th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in. We're going to talk about Wheeze is Smart one more time. Nick, at least for today, Wheeze is Smart. But before we get into it, first and foremost, sir, as always, how are you today?
I'm confused, Gerardo. Head spinning with these markets moving the way they are. And not with our names, like you say, Wheeze is Smart. I understand the positions that we're in on the speculative side of the spectrum. I'm talking about the seemingly endless stream of news, executive orders, whipsawing of the S&P and rates and the dollar and inflation, all the things, right? So feeling a little confused, if I'm being honest. And it was also a busy week. I had a foundational profits issue, and today's Thursday, so weekly issue. So I've been doing a bit of writing. So all over the place. How are you?
I'm well. I'm above ground. I'm healthy. I'm thankful to live in a peaceful community. I'm thankful to have a beautiful wife that loves me every day, and got healthy kids, man. Life is good. We're above ground. So that's a long-winded way of saying I am doing well. I am thankful. I am grateful, and ready to get to it, man. There is a lot to chew on this week. Greenland, we're going to call that red, white, and blue land. That's the state of our discourse right now, right? And jokes aside, the Trumpster again and his administration coming out with, some pretty definitive and bold actions this week. Some of it's talk, some of it's going to lead to action. The talk part is he absolutely wants rates to come down. This after, saying just, I think, half a week ago that the Fed did the right thing with slowing and pausing the cutting of rates. So 2 days later, I think somebody showed him a graph, and maybe Elon and his child had a conversation with him and explained to him that, Mr. President, rates at this level are not sustainable, no matter how much waste we find and how much we cut from the budget. So some things that I really like, I really like Elon and his team of super, somebody called them the team of super geeks, but I'll call them the super phenoms, these 19, 20-year-olds going in there and reverse engineering everything. I like them getting in there and getting into the Department of Defense and getting into the Pentagon's budget and getting into the Department of Education. I know it's controversial amongst those on the left. Privacy concerns. I'm going to be very frank on this one, everybody, and we'll talk markets in a second. But if Elon wants your information and my information, and if China wants your information and my information, they got the information. And let's just be frank. Let's just call a spade, right? We could live in this hypothetical world where we're privacy warriors, and I'm all for it, right? I lean more libertarian than anything else. But the bottom line is there should be checks and balances. In this case, sure, have the checks, have the balances. Let us know what's really fraudulent, not just the stuff you disagree with. But I like that they're line iteming everything. And hopefully, again, I said this last week, I'll say it again this week. Hopefully we get to a point in the discourse sometime soon from Elon and his team where we're not just talking about the things he doesn't like from the left, right? Programs that he doesn't like or agree with. Hopefully we start getting some accountability from both sides of the aisle. And again, I don't see how you go and you look at the Pentagon's budget and don't come out offending or upsetting both sides of the aisle. So those are my thoughts on Elon and his team of super nerds. Thoughts on privacy and then that approach?
I mean, I haven't really been, I've been paying attention, obviously, but I agree with you. There's been so many data leaks from big tech companies. We've talked about this on the podcast for a while there. Every month I was getting one of those things, right, where you have to set up an account with one of these watchdog websites to monitor your credit and stuff because whatever, T-Mobile leaked your data or DirecTV leaked your data or AT&T or whatever, right? So your data's out there. And my head has been more in the markets because what you say is right. So all that stuff is dominating the headlines, right? I mean, fuck. Everything I read, see, and hear is, tariffs this and, whatever, Greenland that and
Red, white, and blue land.
Yeah, Gulf of America, and we want to get the rates down, like you said. But then when you start diving into the details, which I was doing as I tried to write this macro issue this week, it's and I was saying this last week on this podcast, is it's sort of tough to figure out where the rubber meets the road. So let's start with rates, like you say. It's like they want to get rates down. Well, if you read about how Mr. Besant wants to do that, the first option he talks about is, we're gonna deregulate and we're gonna open up energy production in the U.S. and that's going to cause oil and energy prices to come down, and that's gonna lower the bond yields. That's their first line of argument, and that's I mean, okay, you follow the logic, and then but you can then start poking holes in it. Like last week, I told you we're already producing a record amount of oil in the United States, and the price has sort of been all over the place, right? It was going up. Into the middle of January, oil prices were, and that's why one of the reasons we just got a 3% handle on inflation, right? It's back to a 3% handle. But then oil starts going back down, and you could get some disinflation or some deflation over the coming months, despite all the headlines about eggs and rising prices, right? Oil is a much bigger input, and it's been coming down. So, okay, that's that. And then I don't know where that ends up. I'm sorry. My crystal ball doesn't, spit that out for me. And then the next thing he'll talk about is one of his 3-3-3 things. One of them that he talks about with the bond yields is getting the deficit to 3% of the GDP. And so I started poking around that just to get my head around the numbers and stuff. And it's currently over 6% of GDP, the deficit is. And if you look at the projections for this year, even with all the DOGE stuff, which is what you were talking about, the Treasury Department payments, the U.S. aid, which we know, the buyout offers, which is still very much in the flux, you're still talking about an expansion of the debt and an expansion of the deficit in the year 2025, right? And so I'm not sure how you're reducing the deficit proportionally to GDP if the deficit is projected to grow. And then my head starts to sort of implode, right? Because how do you hold all these things in your head? And that's why I was saying I'm feeling confused. And they're still going to cut taxes, by the way, as the deficit is projected to expand, which I'm all for the tax cuts. Bring them on, baby. Extend the 2017, business tax credit or tax cuts and Job Act. I'm all for that, right? It benefits me. But when you look at it on the paper, on like how does that rectify against the deficits and the thing? It doesn't make any fucking sense, right? And so what I ended up concluding is, we're just trading from headline to headline, tweet to tweet, right? Yeah, I mean,
Remember these?
trading from headline to headline, tweet to tweet, and that's about as good as I can give you for right now. So by all means, there's waste in the government. We talked about this last week, but by my count, all the layoffs and even the people that have taken the buyout offers, it's still only like less than 1% of the federal workers, right? So I'm still not sure where the rubber meets the road with all this, and I think the market is seeing that as well. And so I'm starting to get long on the tooth, but I think that's one of the reasons gold continues to do what gold's doing is because people are saying everything that I just said out loud and going, wait a minute, back to your calculator, like something's not adding up here, right? And I'm not sure what that is yet, but I think we'll obviously see as these next couple of months unfold.
Listen, I think there's a couple of, you mentioned gold, so let's talk gold. And then I do want to get your thoughts on the overall markets, the overall indices, because you pay attention to those a whole hell of a lot more than I do. But look, with gold, there are, it's not even rumors, right? It's a matter of when, but China is freeing up a possible $27 billion from insurers to invest in gold for the first time ever. I don't think we pay enough attention to the global macro trends. I think we're very, very U.S.-centric in the way that we view a lot of the things that we talk about and that a lot of, podcasts and analysts talk about. But that is a huge pool of capital that potentially can come into the gold space. And that tells me two things. It tells me that China is absolutely hedging against inflation and bolstering its gold reserves in a very aggressive way, which explains a 29.27 gold price, even with the dollar index still above the 107 level. It softened up a bit as the market, I think, foresees QE coming down the road and Trump getting his way with rates coming down, however he achieves that. But that's one point to make. The second point to make is I think China is running the gamut beautifully on the U.S. So when I see Mr. Trump talk about, a United States sovereign wealth fund, that's almost as comedic to me as the Inflation Reduction Act, which printed a bunch of money and gave companies a bunch of loans and stimulated the economy in order to bring inflation down, right? That's what I was supposed to believe. How are we going to start a national sovereign wealth fund, if we are broke as in negative $130 trillion, and the number is just so big, it's mind-boggling, right? I had to make sure I was citing the right number. $130 trillion in unfunded liabilities. Gold is sniffing that out. If y'all think that $3,000 is a high gold price, give it a couple of years. This is a trade that we're going to be able to absolutely profit from and make an absolute killing. And so, look, you and I just held a private placement webinar this past week, and we'll put the link up here at the end of this episode so that everybody that wasn't able to watch it can watch the replay. But, basically we get into the ins and the outs of private placements, how you're allowed to participate, what you have to qualify for, what they are, how we do them, how we bet them. We get into the whole, guts of private placement investing. And so, we got some deals coming up. We got 3, I think, that we're trying to get across the board here, across the finish line. And both you and I are seeing deals almost every day. So long-winded way of saying, I think gold goes a heck of a lot higher. We are absolutely thrilled to be able to position for it and thrilled to get subscribers positioned for what I think is going to be a hell of a 2, 3, 4, 5-year run. And all it takes is one great year like the one we're starting to see develop and materialize. And your life can change. Your finances can change, right? If you do it right and you position correctly.
Yeah, we'll have that replay up. The deals that we advertised or pointed to as upcoming in that webinar will be materializing here over the next couple of weeks, and we'll be sending out the emails. I know a couple of the paid Bizarro World folks watched, and one even subscribed, so thank you for that. We look forward to doing these deals alongside you, and they'll be coming fast and furious here ahead of PDAC. I expect the news flow to be pretty robust as well. Gold going back up, as you said, new fresh highs in sight. Despite all the volatility in the macro inputs that I was outlining earlier, it looks good. The earnings reports are starting to come out. Barrick was okay. Traded Lumina in the weekly letter last week, and that worked out really good. So as you said, feeling smart. Lots of reasons to like gold. You mentioned China. And the amount of money they're setting aside. I continue to see money coming out of the other sectors that were leading before. I was writing today that IT is now the worst performing sector of the year in the S&P. That was the sector that was driving new record highs, in all of 2024. And I was writing that I'm contractually obligated to tell you that, the amount of market cap that just NVIDIA has lost over the past couple of weeks, which is $400 billion has come out of NVIDIA, is more than the 10 largest gold miners in the world. Their market caps combined, right? There's something like 300 billion to the 400 billion that's come out of NVIDIA. And at the same time, the S&P has softened a little bit, but isn't in crash territory. And so the breadth is okay in the market. Other sectors are starting to lead. Financials are perking up. That's the other sector in addition to energy that a Trump administration would want to deregulate. And so I just think a couple of bumps in the road here, but overall the indices are okay, and that's pretty good because if you do get a market crash, and I hate that we always have to talk about these extremes, but your gold stocks are going to get crashy as well. Like they don't stand on an island when the rest of the market is crashing, right? So you do want the broader markets to be, maybe not setting record after record every day like they were last year, but you don't want them to be crashing. And that's sort of the environment I see now, where the S&P is having more measured days, and again, being driven by, companies that have a less concentrated percentage of that index, right? And that's a good thing. All that said, we did just get a Powell presser. There's no Fed meeting in February, but you can essentially, not expect the punch bowl in the next couple of months. We'll see. We just saw inflation go back to 3%. I would expect by March, the market is asking and looking forward to a new rate cut, but we'll see how it plays out. I think I might have lost Gerardo for a second there, and I'm not sure what he wanted to talk about next. But I would keep talking about the assets, hard assets, commodities in some respect. We've been talking about. Good, you're back, sir. Hopefully he can hear me. We've been talking about inflation being in the soft commodities and eggs, which were one of the highest commodities that went up over the past month. And one of the reasons that inflation number is back at 3%. We've been talking about coffee. Can you hear me? Excelente. I just
So
was,
we're live for everybody that's out there. So on my end of it, I have a serious echo. So
oh, I don't know what to do about that.
hence my silence. The only other time that I am quiet.
Well, listen. I was just wrapping up about gold. I was saying that it looks good. I was talking about the money coming out of tech and rolling over into other spaces, and I was starting to talk about inflation going into other commodities away from the softs. Maybe you talk about copper for a little bit, which I saw was back closer to $5.
No, listen, I think you said that well. I'm going to try to talk above the echo here, and hopefully for everybody out there, it sounds normal, right? But I absolutely agree with your take on gold. I agree with the sector rotation take as far as the tech stocks go. And I think, look, what's good for gold is good for silver, and I think silver's still underperforming. It's above 32, but I think it's probably needing to break 33, 34 if we're going to make a run to that 37, 38 level. Thoughts on that, Nick?
I think I was writing in the monthly issue of Foundational Profits that silver has catching up to do. I was telling you as much last week when we recorded this podcast, and I was looking at the chart since the turn of the millennium, so basically since the year 2000. This week, and gold's gone up over 900%. Silver's only up around 500%. The number I'm watching is 35. So I think silver needs to get above 35, and then it can make a run at the highs back from 2010, 2011, that $50 mark. You're getting a buying opportunity, I believe, in some in silver particularly, but in these gold stocks as well, because there's been some bifurcation as earnings have come out. I said that Barrick had good earnings. Kinross actually had decent earnings, met their production number, and yet the stock went down 5%. So you're seeing a little bit of volatility in gold names, and I think that's going to be papered over in the long run by a gold price that's down near $3,000 an ounce. So any weakness you see in these gold stocks, I think is to be bought. And on silver specifically, we're in an ETF called SLVP, and we brought that pretty well late last year in 2024, and I was adjusting the price levels here this month for that as well. So bullish on silver. I think it needs to show a little bit more strength before it makes a run to 50. And also see this inflation. That's what I was saying when you dropped out. See this inflation spilling back over away from the soft commodities into the hard commodities, into things like copper.
And look, if you look at the copper price, copper's absolutely snipping that out, right? The spot price is 424. Not sure what the futures price is looking like right now, but I can tell you it looks to me like it wants to make a run to 5. And if you look at some of the projections, how many copper mines we need by 2030 just to keep up with demand, I think the amount of copper mines that we needed 50 lithium mines by 2030 to open, mines of significance, in order to go ahead and maintain that supply. That's not going to happen, folks. It's a similar situation in copper, although I think the deficit in copper is going to be a whole heck of a lot harder to overcome. I think we need something like 30 or 31 new mines opening by 2030. If you take the amount of time that it takes to permit a mine, to make a discovery, drill it out, permit it, then develop it, then actually build it. It's not happening in the next 5 years, folks. We know what the pipeline looks like. That's what we had paid to do. This is how we make our money. We keep paying attention to things like that. The copper deficit's going to be massive. I think that's going to be another mega trend over the next several years that we're going to be able to profit from. And look, everybody knows my single largest personal position, but I have some other large positions in silver, in gold, in several other sectors in the commodity space that I think are going to do just phenomenally well. And we'll talk about some of those names here on the premium portion of this podcast. But thoughts on copper and inflation being sniffed out by the copper price? I think it's clear as day to me. It seems simple, right? Almost too simple to follow along sometimes. I always pause when things seem easier.
No, that's it. Bullish on copper. I'm of the belief that you get a slight pullback in broader markets over the next month and into the next Fed meeting in March, and I intend on using that to get into some larger copper names. Have already entered some smaller copper names in the weekly more speculative letter, but haven't been in the Freeports or the BHPs or any copper ETFs in the macro letter, and I'm looking to get back into them here over the next month. So, check out Foundational Profits if you're interested in that. I would actually point to uranium as well, because I do think this inflation is going to start stair-stepping back higher. And again, I probably sound like a broken record, but it's been mostly in the soft commodities, and we haven't really seen it in the hard stuff. Uranium has been slipping, right? If you
Sure.
look at the price, we were saying, oh, it's at 75, oh, it's at 70. Well, now it's got a six handle on it, right? At 67 or $68 or something like that. I don't think that lasts forever. I think this is one of the last sort of opportunities you're going to have to get positioned before a strong run in the remainder of 2025. And I'm just lumping it in there with hard commodities. I'm not calling out uranium because I think there's a specific catalyst ahead. I just think that the general fundamentals, supply and demand, are going to continue to play out this year, and I think that the move down has been overdone, and just like we were scratching our heads at $4 copper a couple of months ago, and now it's
Yep.
back up to 478. You asked about the futures market. I mean, I think you'll see a turnaround in uranium and uranium equities as well. So inflation not gone yet. And that's why it's going to be so interesting to watch these dynamics between the Fed and the administration, who wants lower rates, and the Fed, who is saying they want to maintain for the time being because inflation is going back up. I mean, it's going to be a lot of popcorn and fireworks. So, but set all that aside, what I see is higher commodity prices for real.
Yeah, no, I could agree with you more. I think one of the funniest moments of the week, just to switch gears a tiny bit, was Elon Musk's son, while Elon was talking, telling President Trump to hush. He said, "You hush." I mean, what? Like, you couldn't script that any better if you have a sense of humor, folks. And it was absolutely hilarious. I think that's a moment that, in a couple of years, we're going to look back at and really get a good giggle out of, because I think it's ironic, right? Just the optics of Elon standing there while Trump listens, and Trump is sitting down, and Elon is standing up, and Elon's kid is just running around raising hell and telling President Trump he needs to be quiet and keep his seat.
He's a good dad, that Elon. That's what his pseudonym said on Twitter, I think, right?
Oh man, listen, one last point I want to make on China. China buying as much gold as it's buying also tells me that it's probably getting the bazooka ready on the stimulus front, right? And we've talked about in this podcast how late last year it got really aggressive because of the downturn in the housing market, the stock market, all the things that make Chinese citizens feel good. We're starting to feel less good, and so the upside to the Chinese economic plan is they can just go in and cut rates and decrease mortgage rates, increase lending standards, decrease lending standards. They say it happens immediately, and I think the price of gold right now is also sniffing some of that out. Do not be surprised if you get massive intervention in the property market, the EV space, even lithium starting to sniff that out a little bit. You're starting to see, a bottoming of the lithium names, and some of them, the producers, have perked up substantially here over the past month. The developers and the explorers, not so much yet. An opportunity there. We'll talk about that in the premium portion of the podcast, but expect big stimulus out of China.
What else?
Well, I think any other thoughts on the private placement webinar? I know we said we'd put a link up, but anything else that you want to touch on? I can't emphasize enough, if you're an accredited investor, the amount of deal flow that we're going to have. And I say that confidently because I think, much like I'm sure yourself, Nick, you're looking at deals almost every day. I'm looking at deals almost every day. I got 2 in my phone right now of people wanting to chat with me about, early stage financing, and we want to do this and we want to do that. Would your group want to participate? So that tells me the pipeline is going to be robust here for the rest of the year. And it tells me that the quality of deals is going to continue to be robust, right? I think last year we had one loser out of every single deal that we finance. And that one isn't dead yet, by the way. I still own a boatload of that one. Haven't sold a share. So I'm looking forward to the rest of the year and the deal flow we're going to be able to bring to people. But it's getting busy out there.
I mean, the thing I would say is just try it out, get started. Obviously, right? We did that webinar as an invitation to get people to do these private placements or these direct investments with us. And we've done that once in the past. We did it last June, and maybe that's a good place to start. Last June, when we had this webinar inviting you to do private placements alongside us, we offered you to come inside and do a copper private placement, and that was in Hannon Metals, right? So that was a 35-cent financing, and we've talked about Hannon nearly every week since then, right? It's gone over $1 at this point, is trading very well, and is gearing up to drill. And we had warrants in that allowed us to buy more. But that was only one of 4 big winners we had in 2024. So we did 10 deals in 2024. 4 of them would have allowed you to triple your money already. And all of them have warrants that you can leverage your position to generate even more returns. 3 of them are gearing up to list in this quarter, which will be liquidity events and value unlocking events, given the environment that we're in for precious metals and resources. And that's 7 of the deals right there. 2 of them are double-digit winners, and one of them is down. So I was writing a note about it today to send out for the replay of the webinar, and I was saying, I'll put that track record up against anybody, right? 10 deals with 4 that tripled your money, with warrants that allow you to buy more.
And
we
3
have,
that we haven't had opportunity to see run yet, right? The private ones that are going to come public. So if we're really doing the math fairly, we're saying 7 deals that are public. Out of those 7 deals that are public, only 1 is in the negative. And again, I own a boatload in that and just wrote another check. So I still feel confident about that one working out.
Yeah, so that's what I'm saying. You just check it out. I think that's the hardest part, right? That's the hardest part in a lot of new things. If you've never done private placements or if you've never done anything, the hardest part is getting started. And we try to make that easy for you. So you talked about it during the webinar, how we have relationships with brokers we can put you in contact with. I talked about how I've recorded a video where I go through the documents that you got to fill out to buy shares directly from a company, called subscription documents. You talked about how we have a wonderful customer service department, and it's really not a department. It's Jimmy Mengel. He handles
Department of Jimmy.
That's right. I mean, and we're a small company, so he handles customer service for all of our, I think, eight paid publications at this point. He knows our customers by name. He has relationships with many of them. And if you have a problem or a question or need something, he will get it for you. If he can't get it for you right then and there on the phone or via an email, he'll reach out to you or I, and we'll get it taken care of. And I was saying there's also an FAQ report up there. So you've helped people do private placements that have never done them before. Yep. I've helped people do private placements that have never done them before. They have questions. Their questions are sometimes illuminating to me because it's like, oh shit, I never thought about that, or I never ran across that problem, or whatever it is, or shit, I don't have that stock with Canaccord, so I don't know what the rule is. Like, there's always stuff to figure out. So that's part of what makes it fun and keeps us on our toes. But these stocks are running, right? I mean, we went through it on the webinar. Just go check it out. We went deal for deal and showed you the returns, showed you how much you would make, etc. Went over what it means to be accredited, and the next new deal will be out this week by the time you see this. So we record this on a Thursday. The free version goes out on a Monday. Like, one of those deals that we invited you to participate in will be occurring now. So I encourage you not to delay, to check it out. And the reason I started down that storyline was we offer a 6-month refund. That's what I was trying to get to. So check out the deals, participate in them. Fuck, even if you make money, you can refund. I mean, hopefully you won't do that, but we give you 6 months to do so. That's a pretty generous guarantee and refund policy there. So if you can't figure it out, if you don't want to do it or whatever it is, just call Jimmy again and get your money back. So that's what I would say. You'll be seeing the replay. We'll have links up to it.
I love it. Let's get to some banter, right? Some therapy about just the crazy wonky world that we live in. Interesting things that I'm seeing. Interesting things that a thing that I saw today that I'm really curious about. I'm only curious about it not because Apple tweeted, a 1 minute close up of a design that is like chrome and glittery or whatever that you can't tell what it is, right? But the tweet was um, make room for a new member of the family. And interestingly enough to me, Elon reposted that. And so there's always been talks about Apple getting into the EV business, right? Those talks, I think, it dissipated in 2024 with Apple acknowledging the head start that Tesla had. There's simply too many highway miles, heads up that Tesla has over most of their EV competitors, definitely the ones here in the US. And so I've long said it would be a great fit, a great partnership for a company with Apple's balance sheet to marry with, a tech company, which is essentially what, Tesla is, and use the power of that balance sheet and Elon's brilliance to really make a next generation U.S. dominant electric vehicle company. Not to mention, the solar panels and all the other work that Tesla does. But that was interesting to me. I'm watching for that. Any thoughts on synergies there, or like potential? It
No
makes all
doubt.
the sense in the world to me.
I mean, I've never really thought about it. I'm not a tech guy. You'd have to ask Chris or John. Uh, Tesla is essentially a tech slash data company, right? You've
Sure.
heard the cars called computers on wheels, right?
Yep.
He's trying to get towards autonomous. It's all about sensors and data, and Apple is obviously really good at all that. I don't know. I didn't see the tweet. I think that Apple has been a little bit bearish. I'll revert to my macro takes, right? So I'm not sure how, at the same time, I've been talking about this rolling over of tech, and there seems to be just a little bit of lack of interest in there. An announcement like that would certainly get those animal spirits running again, and would definitely be a coup for Elon, given their heads, given Mr. Cook and Mr. Musk. They don't seem like the most common of bedfellows.
They
They
don't.
would be like sort of strange bedfellows, right? So, I mean, shit, I honestly don't know. Your seat in Austin might give you a little bit more insight into that. But what do you think the tweet was? Was it did it look like it could be a car?
No idea. I mean, it literally looked like, so I have a Tesla, right? And it looked like if you zoom in to one of like the chrome pieces on the side of the car where one of the cameras is embedded, it looked almost like a jazzed up version of that. It was
Hmm.
very cryptic. It was very, I don't think anybody's going to really be able to figure out what the heck they're talking about, but I will know soon. I think they said something like Monday or something like that. So just curious, something that this sparked my interest, and I thought I'd mention it, see if you had any thoughts or ideas on it.
No, I mean, no, not on that particularly. I just give you a short story, maybe a little bit of levity and brevity, and given all the stuff that's going on. Is I was looking at the electric Hummers not too long ago, because they've been sending me emails about them. I might have told you this
Yeah, yeah,
actually on
yeah,
the
yeah.
podcast.
Hmm.
Yeah, and so they're having trouble selling the Hummer. Ultimately, I don't think I'm going to do it. I have a GMC pickup truck, and I'm not really a Hummer type of guy, but I entertained it for a second, and they're obviously getting to a point now where they're in these big trucks and SUVs, and are starting to get some a little bit of traction, if not eyeballs, right? Like I see people still talking and tweeting a lot about the Cybertruck, and it still drives conversations. Like when we were in Vancouver, I saw like
Yeah.
tourists taking pictures of Cybertrucks when they were driving down the street. So they're eye catching for sure. I don't think I'm ready to dabble just yet, but Apple does have, maybe they're just coming in from, here's my last thought, I guess, and I thought of this while I was just rambling on there, is they have different brands going back to the strange bedfellows. Like I'm not sure like Tesla and Apple have the same following, although they both have cult followings. And if you could get
Sure.
Apple diehards to buy a Tesla car and then vice versa, then yeah, it probably does make a pretty good business sense.
No. Interesting. The other thing that was interesting to me this week is, I'm hearing, and look, I've been talking about this since at least 2016, right? Eventually, because of the unsustainable debt. I was saying this 8 years ago when it was better than it is now. It's crazier now, right? The debt levels. But I've been saying that eventually we're going to have a Bretton Woods type moment, right? And for those of you that aren't familiar with Bretton Woods, it's the agreement basically that, really formalized and structured the way that our financial and monetary system runs basically. And so I keep hearing more and more chatter, and it's starting to come from like circles that don't usually chatter about the Great Reset or a great monetary reset. And whether or not that happens or not, folks, really is inconsequential. It'll be consequential to the positive if it does happen, because I think hard assets, and this is my point that I'm trying to get to, hard assets are going to become more and more precious, whether it's vacant land, whether it's land with the property on it, whether it's a business, whether it's gold, whether it's a mining company, a exploration company with real assets, all of those things, the things that you have to make that actually have utility, right? Unlike a Trump coin or a hot tool coin, right? These are real things. I think there's going to be a premium for all things hard assets here. And I think we're starting to see it clearly. I mean, you're seeing it in the gold space. You mentioned going to Costco and looking to buy, some gold, and then them running out, and, all they had was the big baller bars, right?
200 million a month. I looked it up since the last podcast. Costco selling 200 million a month in gold.
Yeah. So no. It'll be interesting to see. It'll happen eventually. When it happens, beyond me. Much like you, my crystal ball is foggy when it comes to that. But I definitely see a move away from the dollar. I definitely see, the new Treasury Secretary is very pro gold, is very pro assets, and so will gold be in the mix? Almost sure it has to be in the mix if you're looking to reset something that has lost the confidence of not just most Americans, but most of the world. The only reason the dollar remains the reserve currency, it's because it's the cleanest dirty shirt in the laundry basket. I've said this over and over, right?
And the aircraft carriers.
And the aircraft carriers, right? And so I think it's going to be, I have to go 2025, it's going to be a volatile one. Any thoughts there, or anything that stuck out to you here over the past week since we last chatted?
No, that's always a thing that's in the background, right? And you never really know how it's going to pan out in terms of monetizing the debt or revaluing the gold in Fort Knox or all the things that you hear, right? So it's one of those things that I just sort of let operate in the periphery. I used to pay much more closer attention to, but at the end of the day, we know what's real, and that's the devaluation of the dollar. Forget the DXY, which is how it trades against the basket of the currencies, to your Bretton Woods point, right? That's what keeps it strong, and the reserve currency. But outside of that, we know that the dollar's purchasing power, its value, has gone down. We know that it's the inflation has eaten into your purchasing power, and I've always known that, right? I mean, not always, but through the course of my career, I've learned that, and that's been one of the main tenets through which I, look at the market and invest. Right, is that I want to own hard assets. I want to be on 40 acres surrounded by trees, right? Like,
And guns.
I came to those conclusions a while ago. I don't think about that every day, which I know some people do. And there's obviously a market for that. Maybe I'll talk about that for a second. I see these videos still getting more the clicks and the shares, the collapse of the dollar, end of the regime. And it's like, yeah, it was like that every year for the past 25 years or whatever. But whatever, I guess, P.T. Barnum and such. But it's a real possibility. And the thing is, well, I already said it. You can't operate every day like it's going to happen that day. You have to sort of make it a part of your overall philosophy and build your life and your portfolio and your house so that if and when it does happen that day, you're relatively insulated from it. And again, by nature of where I live, by nature of where you live, by the things we own, how we invest, the hard assets we own, the diversification of income and then revenue streams that we've tried to set up. That's how we operate, that the dollar's not going to be the world's reserve currency forever.
Agreed. Well said. Anything else out in the world that you want to get off your chest there, Mr. Hodge?
I'm looking at the thing here, monetary reset. You talked about China.
Blood diamonds. You wanted to chat about blood diamonds, I think.
I'll do trust but verify just real quick. I wasn't really sure how to get into this conversation, and I've seen a couple of stories I'll try to tie together along with the conversation at a recent kid's birthday party. So I was talking to some of the parents, and we started talking about food, right? Came up about pesticides and organics, and how they were talking about how they should really be feeding their kids organic. It's better. And that was a consensus. It's tough to get consensus these days, Gerardo, and even like
Really?
what you should be doing, right? So it seemed like the consensus at this birthday party was that yes, we should be feeding our kids obviously the best possible food that we can give them without pesticides. But a couple of the dads in the mix, where I live in Eastern Washington, near North Idaho, and what goes along with that. And I don't want to generalize people, but Rogan listeners, more tinfoil hat inclined, etc. And they take the conversation down the rabbit hole of essentially we get to a point where we can't eat organic food because we can't trust the organizations that are certifying it organic. So how do you even know that it's organic and it's better? And at that point, I think I said something like, well, it really depends on how thick you want your tinfoil hat to be. I mean, I said that at the kid's birthday party.
That's
It's
hilarious.
like, well, like,
That's
at
such
what
a
point-
Nick conversation to have at a birthday party, folks.
Like,
For those of you that don't know Nick.
At what point does it stop? Because it's like, all right, we agreed that we should be eating organic, and we agreed that pesticides are bad. I should have said, like, well, how do you know pesticides are bad? Just like take it all the way full circle, right?
Yeah.
And I feel like that's where we are almost as a society, and it's part and parcel for the fourth turning and being confused and not trusting institutions. I get the not trusting institutions, believe me, but
Yeah.
there has to be a line is what I was trying to say at this birthday party. Like, if you want to eat organic, like, you can go on the USDA website and you can look at the 80 organizations that have been vetted to go to a farm and say, yes, these farms are doing things organically. But maybe you can't. I don't know. Maybe the USDA is just as bad as USAID and we should slash all their funding and we shouldn't believe anything they say. Do you see what I'm sort of saying there? Do you see what I'm getting at?
It's a bizarro world, Nick.
Right. And so anyway, we decided to feed our kids organic, and that's what I said. Like, you guys aren't giving new knowledge to me. We decided to feed our kids organic before we had them. Like, we've been buying organic fruits and vegetables. You can see, I said some of the stuff. You can see who certifies them, organic tithing or the Oregon tithe or the different, departments of agriculture, state by state, et cetera. So, but then, I saw this other article, and I guess this is longer than I wanted to take, but it was about B Corps. And I don't know much about B Corps, but it essentially means you do things the right way, like triple bottom line type stuff, like Patagonia and Ben and Jerry's and, the sort of company I'm talking about. Well, Dr. Bronner's has its soap in a bunch because it has a super high score. You have to get a score to become a B Corp, and you only need 80 points in this metric to become a B Corp. And Dr. Bronner's has over 200. They're like the epitome of a B Corp. They do everything right. They're squeaky clean, etc. And what's happening is these conglomerates are figuring out how to game the system. So like Nestle, for example, is getting individual of its brands certified as B Corps. Like, it got Nespresso certified as a B Corp with just 82 points, like just skated in there, right? Because there's different components, and as long as you are good at one of the components, you can sort of slide in there and get your thing certified as a B Corp. And Dr. Bronner's is saying, hey, wait, what? Wait, we do things the actual right way, and you just certify in Nespresso. And that's what got me thinking about this line of conversation for the podcast, because maybe you can't rely on the organic certification. What do I know, right? And then earlier today, you sent me something about blood diamonds. And so basically all this is a long pitch for Mine Hub, right? Which is an investment.
That's exactly what I was thinking. You read my mind. I didn't want to say it, but you said it. So, yep.
I'm sure we'll talk about it in a second, and we'll get it in the free version before we get to the paywall side, is that, I guess people don't trust anything anymore. And soon we're going to have to put everything on the blockchain and let people see it from its inception. And guess what? We sort of foresaw that as well, and have been investing in a company that's doing that, at least for the commodity space. Well, I'm invested in a company that's doing it on the agricultural side as well and beyond. But anyway, whether it's blood diamonds, child labor in Angola or wherever it is, or whether it's a blueberry in Oregon that you think might have some pesticide on it, that it seems like we're going to be tracking these things literally from seed to your refrigerator, or literally from the ore pile or the mountain or the ore body all the way to the concentrate or the final metal product. And so there's ways to invest in that. And really, I wasn't trying to make an investment pitch, but trust but verify was really where I was going with that. Is you can hop on the internet. You don't have to read it through some intermediary. Like, you can go to whitehouse.gov and see the actual fact sheets and what the Trumpster is actually saying. You don't have to read it through spin. Just like you can go to the USDA website and call up somebody who's certifying an organic farm. Like, you can do those things yourself. And that was really the message, is trust but verify. And if you do have your thin tinfoil hat on, like, do some research for yourself and try to figure it out. But don't just throw up questions all the time. And that's just the tactic of our time. Now I'm really on a rant. Like, the most engaging tweets and follows on Instagram and Twitter, that's what they do. They say, how can this end well? Or what is going on here? Or, you won't believe this. And then it's
You
just
won't
some
believe her
bullshit.
video.
All right, it's just some bullshit to get you to stay on the page for another 10 seconds, right? So their fucking share count and eyeball count can go up, but you're not really learning anything or gaining anything from it. So do it yourself. I don't know if any of that made sense. Sorry.
No,
for the
listen,
rant.
and I actually miss giving away freebies, everybody. So I'm going to give, and then we'll segue into the premium portion of the podcast, because we have a lot to dig into there. And we'll try to be as respectful of your time as possible, folks. But your freebie of the week, and it's been a while, is MineHub. And Nick brought it up, so I'll go ahead and say it. MineHub is headed much higher. The company was up 50% this week. Heck, at one point today, the stock traded as high as $1.15 before settling down at the 75-cent level. That's a company that we help finance. I want to say,
How do you going to ask them getting there?
20-cent range or 30-cent range. I know I have 40-cent warrants from a year and a half or so ago, and shares, obviously, but that stock is headed much, much higher. That 115 wasn't a flash in the pan. I know the company's going through some warrant exercising right now because of the run that it's been on, but there is a lot of room for MineHub Technologies to go ahead and continue its trek on higher. So that's your freebie for the week, everybody.
22 cents it was.
There you go, with the warrant at 40.
At 40 cents, good for 3 years. That's right. And that was one of those 10 deals from 2024, just to bring it full circle, right?
Look at that.
That's one of the deals that's up over a triple. And then we have warrants to buy more. And looking at those candles, I don't think it's done yet.
It's not. I am pretty damn confident it's not. I do want to answer one question from a reader. Leo, salute and shouts.
Well, hold on. Let's put it behind the paywall. So just let's segue to that. The
right,
answers to the questions are for the paying readers.
Oh, sorry, guys. Boo.
That's it. Well, listen.
That's the structure, folks.
It's been about a month since we started charging for it. Many of you have stepped up and paid. We appreciate that. One of the benefits of paying is being able to submit questions. And so we've been a bit loose-lipped with MineHub there, and that was your freebie. But let's get into the paid version and start answering questions and talking about premium portfolio picks.
Let's cook. I'm excited to get to the paid premium portion of the podcast because it is a busy week. Thank you, everybody who listened on the free side. I encourage you to join us on the premium side of the podcast. It's cheap, it's affordable, it's informative, and it's kind of like a peek into our brains on what we're investing in, what we're seeing, with very, very, very specific, obviously, call outs on the names and ideas that we like. And ultimately we think, hopefully it's a profitable part of your listening experience throughout the week. So thanks everybody for listening on the free side. This was the 304th episode of our weekly therapy session that we call Investing in Bizarro World. Be kind to each other, be human with each other. Have a great one, folks.
See ya.